Welcome back to this next training video in the Unlocking Your Crypto Journey educational series. Today, we're going to talk a little bit about having reasonable expectations in the space, because I'm going to guess that some of you may have already started dipping your toes in and buying cryptocurrency and may not necessarily be prepared for what's coming. So let's get to this video as we discuss some of the things you need to consider while setting your expectations. Welcome back. Today, we're going to be talking about having reasonable expectations as you're coming through the cryptocurrency space. Now, I'm not going to be able to give you all that information by myself, so I've got some people who are going to help us out today. Let's welcome BC PortCorp. You guys already know him, been here before, and let's say he's done a great job helping you guys get some alpha from this training series. BC, welcome back.
As always, it is a pleasure to be here.
Appreciate you. And now for those who have not seen this gentleman before, although if you've been around my channel, you have, we got Joe, Trade Intuition, here to help us. And Joe, for those who are just seeing this in the training section, why don't you give a little TLDR on who you are, what you do here in the space, and then we'll jump into everything else. And welcome, by the way. Appreciate you being here.
Yeah, thank you so much for having me. So again, my name is Trade Intuition. I basically show you how to trade in the most simplistic way. I take away all the complicated terms, pattern memorization. I strip down all the stuff that's very complicated and I make trading not as complicated. And I do that every day. I go stream daily, and of course we do bonus streams as well. My goal is to basically make trading a little bit easier. That's what I do.
Excellent. Excellent. And I say it in every one of these videos. These guys, all their contact information in the description. You should be following them if you are not already. Let's get started. Guys, please tell everybody, give your 2 cents before we kind of jump in some bullet points here. It's important to have expectations. And when I say that, reasonable expectations when you're coming into the cryptocurrency space. Give a couple of quick thoughts before we jump into some points. Joe, why don't you start us off? See, you're the first time here. You get to start us off.
Of course, when we come into crypto, we want to get rich quick. Like next week, we want to be a millionaire. That's not the way to do it. But do not set your goals super crazy high to where they're unobtainable. You know, set reasonable goals and work towards those goals. The very first thing that we want to do is become rich, and that's not the way to do it. But if you have that thought process, you'll learn really quick that it doesn't work out that way. Unless you're really lucky, it's like, you know, getting the lottery ticket, but it doesn't work that way.
Facts. BC, come on, share your thoughts with us. What are you thinking? Give these people a little bit of insight to start us off.
Well, and Joe touched on a keyword that I absolutely hate when it comes to investing, and that's that word rich. Everyone wants to be rich. I want to be wealthy, and wealth is not created overnight. If you want to be wealthy quicker, you invest a little more money. Say, instead of buying your lunch at work, you pack your lunch, and that $5 you saved, you throw towards investments. That's how you get wealthy. And wealth takes time to accumulate. If you get rich, it goes away just as quick as you got it because you don't understand it. You throw $1,000 at a meme coin, say it 10x's real quick, and you don't know what to do with your money because you didn't have reasonable expectations or a plan on it really getting that high. You just threw stupid money at a stupid project and it made you stupid rich.
And you got lucky. Yep. Facts. All right. Well, you know what? Let's get into the bullet points and we'll kind of just talk it through. So let's start with this. You have to have a good foundation when you're setting your expectations. So understanding your level of risk tolerance is important. And again, for those who might be just jumping into this series in this video, we've already talked about risk tolerance. So link is in the description. If you haven't watched that video, you may want to head back there. We're going to touch on some of it here, but head back there and get the skinny. Why do you guys think it matters to have a good understanding of what your risk tolerance is? BC, start us off.
I, coming from the stock side of things, used the same kind of strategy where you go with risk management. And risk management also goes into your time horizon where, hey, I want some safety here. So my safety is my long term. I'm going to put a little more money in that. And then I'm going to come in. I'm going to find something that's a little more risky, probably about 20 to 30% of that portfolio. And that's going to be my more mid shots. And then you have your very low caps, the same way you do in stocks, might be with your meme projects or your extremely low cap new projects in crypto. And you kind of want to balance that out. If you are looking for a little bit quicker gains, which also might go with a little bit quicker losses if you are not on top of things, that's where you want to stack your portfolio in a way that you can manage it. If you want to get a little bit wealthier quicker, you might lean a little bit harder towards those more risky assets with a lower market cap, but you also need to be able to be watching that every day, maybe every single minute of the day, because you don't know if that thing's going to rip 25% that day and then now it's down 45% the next. So
Right.
this is that risk tolerance that you need to be associated with. If you want more of a hands-off approach, you go with safety. Me, because I am able to watch things a little bit less throughout the days, I go with a little more safety, and then I focus my more risky stuff on my actual active trading. So whatever fits best in your risk tolerance portfolio, what you can handle emotionally, financially, and sometimes with a little bit of understanding, you'll be able to readjust that portfolio to what fits your needs mentally, emotionally, and financially.
And I'm glad you threw in the emotion piece there, because that is a huge piece of this whole understanding your risk tolerance. It just is. And again, we've talked about that in the previous video, so make sure you go check that out. But now we're going to give Joe a chance. Okay, Joe, your turn. Go ahead. Tell us what you're thinking and why you think this is important to understand.
So when it comes to risk management, risk tolerance, just risk in general, it's extremely important because without any kind of risk, you're literally gambling your money. You're literally flipping the quarter, heads or tails. You can win it all or you can lose it all. And one thing that plays in the part with risk is knowing the game. If you don't know the game, there's no way you can do the risk. So just kind of think of it going to a casino and you're going to go and play, blackjack, but you don't know the rules of blackjack, but you put all your money down, and
Right.
without knowing the rules, the odds of you losing is very high. And now you only had $1,000 to play with, you lose that. And because you don't have proper risk management of, maybe doing $10 or $20 or trying to learn the game, now you go take out some more money and then some more money. Before you know it, you mortgage your house. You need to know the rules of the game.
It's kind of funny you use that analogy. I've been on that end of a card game or two, just saying. Anyway, just saying. But I appreciate the fact of what you're saying with regard to, that kind of an analogy right there, and the fact that you're looking at it from both of you actually looking at it from different perspectives, where BC is sitting here talking about it maybe from an investing perspective, and T.I. Joe, being the trader, kind of looking at it from that perspective. I really appreciate that, guys. I mean, anything else that either one of you want to toss in, given maybe expanding on that little piece before we kind of move on to the next point?
See, and I can kind of touch on what he said with that gambling. Sometimes it's nice to go in there and throw a little bit of money on 23 black when you're sitting at the roulette table, but you're not going to throw all of your money down on 23 black, because you want to
Right.
be able to try that again and, get that 51 to 1 odds that you win really big. But if you do that with all of your money, then you can't sit there again and try to get that 51 to 1 odds and hit it again and hit it again. So you got to manage that risk on the riskier assets. You can throw a little money on there. Hey, it dips 25%. maybe if you have conviction in that risky asset, you're like, okay, well, look, we're sitting at a 25% discount. Let's throw another little portion of our money on top of that, see if it gets back those gains, and then we'll make some gains on top of that when it pumps up past that initial entry point.
Yep. You know what? It's funny because now I think all three of us have said it at one point or another. So I'd like to suss out one other piece of this. Time horizon. That matters. Again, I know we kind of touched on it a little bit, but maybe we give a few more points. And Joe, we'll start with you, primarily because your time horizon is a lot different than mine. I'm giving it to my grandchildren time horizon. So I got decades kind of thing. And you're in the trading piece. So like, that's like, bam, I need to know now. Talk about that and how people should kind of like work their way through that a little bit, Joe.
That can be a whole, show right there.
Facts.
But when it comes to timeline, like there's so much variables that come into play. One, how long can you hold the trade? Two, do you need that money to maybe get into another trade? Let's say you only have $100 and you put all of your $100 into this one trade, and then you see another trade going, and you're, oh, well, let me close out this trade to get into the other trade. So there's a whole bunch of different variables that come into play when it comes to that factor as far as the time frame goes. But I will tell you this right now, and of course, VC PortCorp and anybody who invests, they know that trading, whether it's intraday scalping, day trading, maybe even swing trading, holding it for 3 days, 5 days, maybe a week, you can make money, but you can also lose money much faster. But the smarter play is always the longer term. That's when you really make your money. And it looks great, that you get 30%, 50%, then you lose 20%, you lose 30%, then you gain 20%. And this is all within a week. But if you were just to be, investing in it, well, if it drops 20, 30%, and again, all this has to do with your risk management and your plan. You have to have a plan, when you're doing this. You can't just kind of, well, let me put more in it. But that wasn't your original plan. Your original plan was, here's what I'm going to put, and then that's it. But then it drops, and now you're kind of freaking out, and you're like, well, let me put more in, and it keeps on dropping. You really do have to know how to trade in a sense, whether it's, moving averages or whatever you're going to use. And all that also plays into the risk, because if you don't know the game, you're increasing your risk to potentially, and we talked about this a little earlier, emotions, like because you don't have all of this kind of bundled in together. When you do see a drop, now your emotions come into play, and you were thinking you're going to hold it for a month, but since you're kind of brand new and don't know what to do, you just sell it. And then as soon as you sell it, of course, what happens? It goes up.
Yep.
So
it's easy for emotions to take over.
There's so many things that are involved in this, but if you just take it slow and learn, like, please, like you're gonna put your money somewhere, whether it's in the market or to a mentor. So you pick one that you want to do, and it's really easy to lose a lot of money in this space. And I greatly appreciate what you're doing, CCM, as far as doing this educational series, because this is literally laying it out for everybody. So, yeah.
I appreciate that. And listen, Joe hit on a bunch of stuff right there. And if trading is your thing, first off, if you're coming in and you're new to crypto, I'm going to suggest very highly that trading should not be your thing. But that being said, I understand people come in with their ideas and their plans. And if trading is your thing, there will be a video that Joe's going to come back, and we're going to be talking all about trading. That's a lot further down the road, but when it's ready, the link will be in the description as well. Okay, BC, anything you want to add to that time horizon conversation?
Yeah, the same way that price movements are not static. You don't get that, okay, well, it's a 10% gain every single week, week after week. Your risk tolerance shouldn't be static either, where you need to adjust with market movements. Say this thing's gaining 10% week after week, and then it switches up and it's now 5% week after week. But your plan was to kind of have it shooting at this same kind of steady growth where this was my medium term basket. I'm shooting for medium gains where I'm getting that nice little gain. We're probably going to sell in 6 months. Stick with that plan and then adjust it just a little bit instead of riding that out as hard. Maybe take a little bit of profit and roll that into something that actually meets that plan, where it's like, okay, so Ethereum's up 10% week over week, and then now it's 5% week over week, but Solana's really ripping right now, and it's 15% this week, 10% that week. Maybe you take some of that money and you put it into that asset that's actually doing what your plan was supposed to be doing. Adjust your risk tolerance with the market so that you can stay on top of things.
All right, let's move on to the next point. Understanding risk to reward. So we just talked about your risk tolerance. So you need to understand what you're able as a person coming into the space tolerate as a potential loss. Well, if you understand a risk to reward ratio on what you're doing here in the space, that could help to mitigate some of those potential losses. So let's suss that out, guys. BC, start us off.
Well, we touched on gambling before, and I'm gonna lean back on that.
Let's go back to it. All right.
Yeah, you come in on a poker hand and say you got 2 8s, and you know that this pair has a decent chance because you've seen the cards that are on the table, but you also know that it's very possible that someone else has a pair of 9s, a pair of 10s, a pair of jacks, a pair of kings. All of these have the potential to beat yours. What are the odds that you win this pot? What are the odds that you lose that pot? That's the same way that you need to look at your investments. Say we'll go with Doge. Doge is a little bit of a riskier investment. What are the odds that it hits your 52-cent target that you are looking for? And that's an exact number. I put it out there for a reason. You kind of look at the top of Doge, and that's the top of Doge. What is the odds that it hits that all over again? Well, kind of looking a little bit low right now. So maybe you take that money, you lower your risk just a little bit, and you set a little bit of a different expectations on what that top is for Doge, and you roll that money into something else that has higher odds of hitting the kind of gains that you're looking for. So ADA might be a little more likely to hit that dollar point all over again. Are those margins the same? Then you put your money in ADA. So that risk to reward should be a giant part of how you manage your portfolio.
Okay, facts. And I'm jumping in here, but I think Joe was probably about to hit on this point. So I'm sorry if I'm stealing your thunder, Joe. But it also varies asset to asset. So that risk to reward is something that you're gonna have to literally reassess every day, every time. My proverbial 2 cents. And like I said, Joe, if I just stole some of your thunder, I'm sorry.
No, you're good.
But we're going to give you a chance to show you got some more information to pass on, Joe. Go ahead. What say you with regard to this?
All right. So in reference to risk reward, again, like all these topics, they could be their own shows.
Facts.
For risk reward, if you have, let's say you're risking 1 to get 3. So you're risking $1 or $100 to get $3 or $300. When it comes to the risk reward, you can't just, as soon as it starts going up, sell, because then your risk reward wasn't really a 3-to-1. It was more of a 1-to-1, or maybe even a half to 1. So whenever it comes to the risk to reward, you have to have a plan. You cannot have all this emotions and FOMO and, oh, I made money, let me close it out. So let's just say, for example, you have originally a 3-to-1 risk reward ratio, and you gain $30, and you are risking $100, and you close it out, and then you do another trade, and then now it goes up to $22, and you close it out because you're making money. But then when you do lose, you're losing $100. So the risk to reward ratio isn't there. You may have it on your chart saying I'm doing a 3-to-1, but when you're actually selling, you're gonna like ruin your account.
Yeah, yeah.
In addition to the risk to reward, it's extremely important that one, you understand the volatility of the coin, and you kind of touched on this a little earlier. And I look at the market caps. The lower the market cap, the higher potential it can move faster, only if there's people buying and selling, and that's what's called volume. So if it's a low market cap coin and you think it's going to do a 20x or 100x or whatever it is, but nobody's interested in that coin, it's not going to move. Even though it's a low market cap coin, it's easy to move. No one's buying it. There's no buyers and sellers, so there's nothing to push it up. But it's extremely important when you do risk to reward that you take into all this into account. But you have to learn how to trade first, though. You can't just look at a chart and say, oh, well, here's my stop loss and here's my target, not knowing market structure or patterns or divergence or moving averages or no. So again, you're gonna do one of two things. One, you're gonna pay the market, or two, you're gonna pay a mentor. And I tell you, the mentor is a lot faster. You just gotta be real careful with which mentor you pick.
I was gonna say that depends. Yeah.
Yeah. And just how BC PortCorp was saying too, and I say this all the time, you have to adjust to what the market's giving you. If you have your stop loss at, let's say, 10%, this is just a random number, 10%, and you're doing great for an extended period of time, then all of a sudden your 10% keeps on hitting. It's like, okay, fine, I'll put it 15%. And your 15% keeps on hitting and then bounces up. Of course, as soon as you get stopped out, it goes up.
Right.
Then what you have to do is you and I say this all the time, you have to be like water. You have to be fluid. If you're in a bow, well, then you take the shape of the bow. You're in a pitcher, you take the shape of the pitcher. So you're always adjusting to what the market's giving you. You have to reassess what has happened. Now, one question that all the newbies ask, which I asked, what's your win to loss ratio? That doesn't matter. You know, I could lose 5, I could lose 7 and win 3. And my 3 that I won will outperform the percentage than when I lost. It's very important. And again, like all these little questions, like each one of these questions can be a whole video.
Oh,
it's a lot. Yeah.
Man, I was just about to say, Joe, you just unpacked so much right there. It's crazy. I don't think we can go down all those rabbit holes.
Yeah, we don't have enough time.
Yeah, we really don't. But a couple of points that I want to make, and then maybe we'll suss out just a little bit more of some of the stuff you said. You were talking about moving the market depending on the market cap, you know, with regard to the price action of different cryptos. And for those who have, again, come into this video straight off and didn't see some of the previous videos, go back to the video where I have Army Piper talking about macroeconomic factors. And toward the end, and there's timestamps in all of the videos, so you can go ahead and find it. Toward the end, he separates out the idea of Bitcoin versus other cryptocurrencies and why he does it that way. And part of the reason is what Joe just mentioned, because of the market cap of certain coins. So go ahead and check that part out. That's the first thing. The second thing is Joe was just talking about assessing your winners and losers. Now, let's be honest. You don't always win. Guys, back me up, right? They're not all winners. Okay.
I've paid more than my fair share of money to the markets. So.
Yes, same.
Facts. And a lot of what Joe was saying is why I don't trade no more. I'm just saying. Just putting that out there from a personal note. Okay. I don't do the trading no more. It's DCA and HODL for me. Anyway, not to get down that road. But because they're not all winners, you have to come back and reassess again and be able to decide now, because maybe you've lost a few. What now is your risk to reward ratio? BC, how about sussing that out a little bit? And then there's one other piece I want us to get to.
See, and that's where time horizon with your emotion comes into play a lot. If trading on the 15-minute chart has you extremely emotional and making emotional decisions, maybe don't trade on the 15-minute chart. Maybe that's not your area where you're going to perform the best. And a lot of that will go into better managing your risk and reward. I barely look at anything lower than a 15-minute chart unless I'm doing it for people on my show. I am a long-term trader. I am a investor. I want to hold something for a year plus and let it make me my money, or hold something for about 6 months or so, depending on what kind of movements we're seeing on the charts. So that time frame has me very emotionless. I'll
There
be
you
up
go.
40% one week, down 10% the next, and then up 30% the next week. That's 70% gains. I didn't worry about all those
It's like,
small
welcome to
movements.
crypto, man.
Yep. I didn't worry about all the small moves. Those small moves will have me too emotional to properly assess my portfolio. I had the goal. The last thing I bought, my goal was to buy SMR at $9. I bought SMR at $9. My goal was to ride it up towards the golden pocket and sell it there. Once we get to that golden pocket, I sell it there. That's the gains that I was shooting for, and it performed the way I wanted it to. If it fell short of that, then I'll adjust there. But instead of looking at, oh, we were up 22% on Friday, and when market opens on Monday, we are down 12%. I'm not worried about that,
Right.
because that's not the time frame I'm trading on. Is the overall trend still the direction I want it to be? Yes. Then I can remain emotionless.
Facts. And for those, I know BC just threw out the golden pocket, and you're probably like, what? Don't worry. One, I'll put a link to the description of exactly what that is. That's a trading term in a nutshell that you'll see a lot of traders decide that that's where the pullback on certain assets are going to go to. But it's something, when Joe comes on and we're talking trading, we'll get into a lot more discussion about. So again, make sure you're watching that video. Now, BC, he does it all the time, man. I love this guy. He started out on what the last piece I wanted to suss out already, which was the timeline. Now, yes, I guess we should probably say that, not everything you're going to do is going to win. I mean, just isn't. We kind of, I think, established that. But over time, you may be able to increase those odds. So how about we have BC start us off talking about that? We'll have Joe round us off on that topic, and then we'll move on to the next point. BC?
A lot of the time when you're investing and you kind of want to hit those nice targets that you're shooting for, you will need to adjust to where things are going, and sitting things down with a clear mind, with the least emotions that you can do, is going to help you the most. Where, hey, I have this money set for this amount of gains, this money set for the next 10 years where we'll cash out then. Well, it doesn't matter what the target is. It doesn't matter as long as I got my set gains about year over year, which the reason we're in crypto is to kind of boost those gains from what your average stock earnings are going to be, where the stock market on average gets you 8% year over year. If you can get, say, 25% year over year with Bitcoin, maybe that's a portion of your portfolio that you manage risk wise with a larger time horizon. You're not worried about the small moves. You dip 60%. That's a buying point, instead of, oh no, we panic and we
Yeah,
sell.
exactly. Which is what most people do,
Mhm.
sadly.
I
All right.
buy when everyone's selling, and I sell when everyone's buying.
Again, more alpha right there. Right? If you haven't already heard it, there it is. Okay, Joe, round us off on this topic, and then we're going to move on.
In a nutshell, very important to learn how to trade. Know the trends, higher highs, higher lows, because when it comes down to investing or trading or doing anything, risk management, if you're unable to identify a trend, there's no way you can do anything. So your stops are going to hit much faster. You're not going to know when to enter. You're going to be relying on somebody to tell you what to do, which is the worst thing you can do. You know, if you're asking for setups, but you don't know how to trade, and they tell you where to buy and the sell and everything else, but something might happen, kind of like what BC PortCorp was saying, where it goes maybe not with your thought process, maybe it reverses. If you don't know how to identify that, you're actually increasing your risk for your stop loss to get hit because you don't know how to adjust to what the market's giving you. So, I mean, just in a nutshell, you have to learn how to trade. Take the time, spend time learning, spend money if you need to learn. But the main important thing is to like invest in yourself. And we kind of touched on this earlier in reference to the traders that they just wake up one day and they trade. You know, there's people who are truck drivers. You don't get out of bed one day and say, I'm going to be a truck driver, or be a doctor, roll out of bed and say, I'm going to be a doctor. But in trading, we can do that. Roll out of bed and say, you know what? I'm going to trade. And that's how people get wrecked, because there's no courses or education that you have to go and get before you trade. And this is where the risk management comes into play. This is where learning how to trade comes into play. This is where dealing with your emotions come into play. Like the emotions it's the hardest part, because you don't want to lose your money. And
Right.
It feels very euphoric when you're winning, but man, it feels detrimental, especially if you're trading with too much. If it hurts when the price is coming down, two things. One, you're either trading with too much or you have your stop loss too low. That's what it comes down to. And that will affect your thought process. But then once you start seeing that, and now it's like hurting, it's like, oh man, you should never need, I need to win this trade to pay my light or pay the mortgage or pay for the vacation. This is actually the honeymoon money that I have that I'm trying to get a better honeymoon. No, like all that will play into the emotional side, which will increase the risk of not trading logically, but now you're trading emotionally and you're going to get wrecked. So.
Facts. And, I look at it this way. The market, like Joe said earlier, is going to do what the market's going to do. And I see it like waves. It's going up one day, it's going down the next day. And if you have the right time horizon, it kind of smooths that all out, just smooths it all out. So, again, something to keep in mind. We're going to stay a little bit on the time horizon thing as we move on to the next point, because like I'm saying that would smooth out the waves and the volatility in the market. It also is the point where you need to look at other factors over that same time horizon. Now, one of the items that we're going to touch on right now, but BC and I did an entire video on it. So again, if you're just coming in here, link is in the description. Make sure you go back and watch it. It's about taxes. Taxes can eat your profits alive. Eat them alive. You know what, BCC, and you and I started with that. We're going to let you jump in and kind of give us a little bit of alpha on that. And we don't have to go into great detail, but why don't you start us off and tell people how they should look at that as part of their expectations in their earnings.
So I know you touched on that time horizon thing, and a big part of how I make my choices on time horizon with certain investments is going to be on the taxes. So it's not pretty. It's not enjoyable. Nobody likes paying taxes. But when you're investing, you need to take that into account. Say I want to hold a project for 6 months, but it's only going to get me 10% gains. Well, is it worth paying up to 24% on those gains if I'm only going to get 10%? No. Then maybe that's going to be a longer term hold where I'm going to pay 15% taxes on it instead, and I get 15% gains. This is a big part of how I manage my portfolio. If I'm going to be wanting to pay higher taxes on something, I'm going to want to invest a little more into something that's going to have a little more upside potential. And that's a big part of how you're going to have to start managing your portfolio and building your time frames on things. So say you're looking at investing in Bitcoin and you want to do that for the next 10 years. Well, in 10 years, you're going to pay 15% when you end up cashing that out at the end, as opposed to it's like, okay, well, I invested in Bitcoin for under a year. It gave me 25% gains, but I'm paying 25% taxes on my 25% gains. You're keeping 75% of your money, as opposed to that 10-year time horizon. You just kept 90% of your money, but it went up, say, over 1,000x. That's where you kind of want to hit. You want to manage that a little bit better.
BC and I go into this in a lot more detail in the tax video. So again, make sure you're watching that. The link is in the description. But with that in mind, another piece of the time horizon, Joe, might be what you're holding and for how long you're holding it. So like if you're trying to set up a portfolio that's going to maximize those tax advantages, you might want to think like, what's your long-term hold? What's a midterm hold? What's a like short, like maybe trade kind of thing? Would you mind expanding a little bit on that?
All right. So that question kind of has a lot of variables in it. So sometimes people think, oh, it's an easy question, but there's a lot of variables.
Yes.
One is, let's just say you want to trade some coins, and some coins you want to have for midterm holds, and some coins you want to have for long-term holds or investments or whatever. I would recommend having different exchanges, or having an exchange that has sub accounts, so that you can not mess with certain coins that you're trying to trade. Because you can trade, like, let's say Bitcoin or whatever coin you're doing, you can trade Bitcoin as just a regular trade, but you also have it as an investment. So you have that in another account or a sub account. I would definitely recommend having multiple accounts or sub accounts, so that you don't touch the other ones. And it's much easier when it does come to tax time, because that way you can run the report all on the ones that you were actively trading. Then there's account where you held it for 6 months or 8 months, and then the other one where you continue to hold it.
You know what? That's a great piece, right? I wasn't even considering that answer. I'm not gonna lie. The idea of utilizing different exchanges, and again, depending on what country you live in, you have access to different exchanges, both centralized and decentralized exchanges. But the idea of being able to run that information and parse that information for tax purposes, having it in different accounts definitely should make that easier. I appreciate what Joe just put out there. So there you go. Another piece of alpha you just got right here. I wasn't going to go down this road, but if we're going to try and break up some of the current crypto assets into maybe a long-term thought process, a long-term hold, DCA, HODL kind of thing, and then a midterm, and then a short-term, what would you say? Let's start with the long-term. What would you say would be the criteria? What would you be looking for to be, as you're assessing these assets, to say, you know what, man, I'm going to hold this, and they're going to have to bury me with it. You know what I'm saying? I'm holding it that long. What would be what you're looking at with regard to that?
The main thing is adoption, longevity. You know, if you have people backing the project, because it doesn't help if you're going to do, let's say, a gaming token or a whatever token, and there's nobody talking about it, or there's a million one of that same one. What makes that one different from others? So what I would do is something that's going to have longevity, something that has a lot of people, the community behind it, and hopefully, you know, getting partnerships, already has successful partnerships, and continuing to work for just strengthening the coin. And of course, Bitcoin, that goes without saying.
I was going to say, yeah. BC, I gave Joe the easy one. We gave him the long term. We're going to give you the mid and short term. Tell people what you might be looking at with regard to those kind of time.
So if I'm going to look at midterm to short term, it's going to be looked at the current state of the market. Whereas as soon as I saw Donald Trump was going to be president, I started sussing out some of those nuclear stocks. And that's just because of some things that he had said before he was elected. And that's going to be more of a midterm hold for me. And that's going off of basically what's going on in my current state of the economy and what are things going to look like in the next year, 2 years to 6 months. And these are those kind of time horizons you're going to need to look at for a midterm hold. A midterm hold can be anywhere from like 3 months, so a quarter, to a couple of years. Whereas in your long-term holds, that's going to be something you're looking at maybe selling when you're ready to retire. So you need to take all of those things into account. And the biggest part of how you're going to manage that medium term investment is, what is your current state of the economy? What is the inflation rate? What are the job numbers? What kind of policies are going into effect right now that might boost your
Yes.
investment, that might crap all over your investment and give you better
Right.
buying opportunities? Like stable coins right now. We've been seeing a lot of stable coin legislation going in. A good investment this past week would have been Circle. As you're watching all of that push in legislation on stable coins, maybe investing in a stable coin market is a good investment as you're trying to see the government push that through. And those are the kinds of things you need to take into account on a midterm investment. On the shorter term time frame, you're really going to need to take into account those heavier data points, like what is inflation rates, what are job numbers, what kind of key levels are we sitting at. And those are going to be those ultra short term time frames. If it's a data week, we're getting GDP data this week, and we're looking at some resistance levels on the charts. This is where you're going to come in and you're going to be like, okay, well, the forecast is this. Do I believe the forecast is what it says it is? Has things been playing out in the past few months where we're actually seeing GDP decreasing? Oh, well, if that's the case, what have I been looking at the past month? Have job numbers really been shrinking? Have I seen my producer price index really rising? Well, then maybe GDP is going to be coming in a little bit lower, and I'll take my bet off of that. Mind you, this is not for the beginner. Do not do this if you are not in there every single day watching this stuff. I say these things as someone that watches all of this stuff daily. So maybe kind of take your step back if you're just in the beginning and focus on that medium to long term.
Yes, BC kind of just hit it right there at the end. The reason that I have set these videos in the order that I have set them is to hopefully, even if you came in with the trader mindset, to try and change you to that more, maybe I should start off with a little bit longer time horizon here and make things a little bit easier for myself. So hopefully by listening to all of these points and all the previous videos, that's where you're going with this, and hopefully that's where we'll get your mindset to at least begin. Hey, I'm not saying don't go do the trading thing, because Joe would be like, that's it, I'm not helping you no more. But like but you gotta start, I think, where again it's just risk. It's just risk and understanding your risk and having good expectations in the space. Hence, we're here in this video. Let's move on to the next piece. And we are literally sitting in the middle of probably the next important point. And that is being educated about what you're doing here in the space and why I'm hopeful why you're watching this video. I realize there's a lot of points that can be talked about with regard to this, but why don't we maybe pull out a few things that you think are important? BC, we got you right here. Why don't you start us off, and then we'll have Joe bring it up on the end there.
I'll say the biggest part of when you're going to be making these investments off of educational purposes, hype is not the way to go. You cannot build wealth if you are just running off hype. You can get rich if you're just chasing the hype, but it's also just as easy to see, oh, well, this project was talked about all over X, boom, boom, boom. It's blowing up, boom, boom, boom. And then you throw your money at it. And then guess what? Everyone just started talking about a different project. And now you're down 70%.
Yes.
Oh, well, it was cool. You got 100x on the one before, you got 100x on the one before, but you threw all of those 100x's that you just got all into this new project because, oh, I've been doing amazing. I can't lose. I can't lose. I got the system. I've been following all these X posts and I got this person that I follow and that person follows this person. So I watch this and the hype just ends up wrecking you. So the more important thing to do is maybe have that hype be a smaller portion of your portfolio, say 5%, and then you have your long-term investments where it's like, you know what's not sexy, you know what doesn't have crazy gains, Bitcoin. But you know what continues to be adopted more than any other crypto project out there? Bitcoin.
Facts.
Maybe that's the base of your portfolio and you build off of that.
Again, 1,000% right there, 1,000%. And listen, a lot of what he just said we're going into in a lot of different videos. So it's again, like Joe has said it so many times here already today. Each of these points could literally be its own video, and I appreciate these guys for trying to come in here and keep it simple, because for some of us, got to keep it simple, stupid. Just saying. All right, Joe, give us what you're thinking about, like the education piece here, how that pulls in and how they're going to be able to learn that and use that, utilize it in their risk management and making expectations.
So when it comes to the education portion, it basically just comes down to you have to put effort into this. You really do. You can't just come in one day and start trading, and you might get lucky, but the odds are stacked against you. They really are. So I would recommend, of course, going to websites, watching people who stream live, asking them questions, and hopefully they don't say, well, join my group and I'll tell you. Hopefully they can answer your questions. But what I would do is I'd strongly recommend, like, put the time and effort into learning, and do not expect to get rich quick. You want to build wealth, like BC PortCorp mentioned earlier. You want to build wealth, and you cannot build wealth with the get rich quick mentality. But we all come in with that, but we end up paying the market, and we pay our tuition to understand that, man, this doesn't happen the way, we hear everybody, oh, they came in with $1,000, they came out with $1 million. Like they got lucky. Like we have to put in the time, the effort, the sweat, the tears, the frustration, and all this takes time. And believe me, you have time, whether it's the bull market, the bear market, like you have time. Don't throw your money at the market, invest in yourself.
Facts, man. Wow, facts. And I'm just going to throw it out there because it's something that I actually talked about with Crypto Billy. So again, if you haven't watched that video, we learn from our mistakes. The idea behind this training series, this education series, is to try and prevent you, to help you, to shortcut you from making the same mistakes we made. Because these guys are going to tell you, we've all made them. We continue to make them. Ain't nobody here in this space perfect. But hopefully, if you're learning, you're getting the education both formally and through mistakes, you're learning. I would like very much if you guys could just maybe touch a little bit on that, because Joe, you were just saying, like, mentors and that kind of thing. And yeah, that could be a community, even if you're paying for it, I suppose. But like, especially for those people who might be coming in and deciding, even though we're trying to get them to think in the long term, they're like, no, I'm going to do the trading thing. And so, they're going to be in that higher risk category for, I'm going to try. Give them at least something to think about with regard to community, and if they're going to go down that line.
First, what I would do is I would go to somebody who does live stream, and I would ask questions. See how their community responds. Are they welcoming? Is it an echo chamber? You don't want an echo chamber. And what that is if you ask a question and the host, he sees your response and maybe he thinks it's negative or whatever he does, or he'll say, well, you have to join my group to get that information. That's a red flag. You don't want to do that. You want somebody who wants to help, not wants to get rich off of you. There's a lot of people out here that have memberships and everything else, but in my opinion, if they truly do want to help you, they're going to answer your question. And not only that, but the community that's in their live stream will also want to help you. And then sometimes they have Discord, sometimes they have Telegram groups, and sometimes they have free groups, sometimes there's paid groups. But what you want to do first, though, you want to kind of fill it out before just jumping in and paying somebody $100 or $300 or whatever it is a month. Instead of doing that, go and see how they explain stuff. Is it too complicated? Are they able to easily verbalize their thought process? You want to find somebody who wants to help.
No, 1,000%, Joe, 1,000%. And listen, Joe has his own paid community, but he does so much free stuff. Again, links to all of his information in the description. So make sure you're checking that out. But BC, you are also part of Piper Academy. Again, links in the description. If you've followed these videos in order, you've already seen and heard from Army Piper. And for that matter, BC, hopefully you're watching him first thing in the morning. He's up a little early for me, but first thing in the morning, he's there giving some alpha. BC, what do you say about the community aspect of things?
I say the biggest thing is going to be finding people who have kind of the same risk appetite that you do. Whereas over at Piper Academy, me and both Piper focus on more of the long term, where I'm looking at, hey, I'm going to cash my Bitcoin out when I'm 67. I guess that's my retirement age now since they changed things. Or maybe taking out
I was going to say for now anyway, right?
Yeah, for now. It might be 72 and I might not ever be able to retire. We'll see though. But you kind of want to gravitate towards those people that are of that same mindset as you. The other part that you're going to need to take into account on that though is what kind of transparency do they have? When I'm buying, I tell people first thing in the morning on my show, I'm like, hey, this is either what I bought yesterday or this is what I'm looking at buying today. So that's kind of what you want to look for when you're looking for a community. Are these people trying to trade the same way you are? Are these people trying to invest the same way you are? Do they have similar risk appetites? Can you understand what they're trying to say to you when they're saying it to you?
Wow. There it is right there. We're going to go on to the next point. And that is to think about the way you're addressing your plan here in the space like a business. And I remember the first time I heard that, it was actually an interview with Crypto Billy. And I was just like, I guess that makes sense to me because I do treat this like a business. But I try to look at it from maybe the new person coming into the space and they're thinking, I don't want a business. That's not why I'm here. That's not what this is about. But I think if you try to think about it that way, it may help you to plan better. I'll tell you what, BC, you're right there. Start us off with that thought process.
Well, I think the key point of it is you are the CEO of your investments. And when it comes down to it, at the end of the day, if you lose, you lose. If you win, right, you win. And the point of thinking about investing as a business mindset, what is the point of a business? Well, part of the point of a business is to provide value. The point of providing value is providing value to yourself, not value in your current state, but value at a later time frame. The other part of a business is to make profits. And businesses make profits by strategically making moves and always analyzing those moves that they made. And if you don't do the same thing, you are not going to win. Find your value in your investments and find what is profitable for you. And it's not going to be the same thing for you that it is for me. Me and Joe have very, very different strategies, but we are both profitable the way that we do it because that's the way our business is set up.
Yep. No, that great analogies right there. Great analogies. And you make great points with regard to providing value. Now, you highlighted especially value to the business, so value to self, which again, we're here to do that, right? I mean, that's all why we all got into the space in the first place. But Joe, the business is also, now I'm not saying you can't talk about the other stuff, by all means, put your 2 cents in there, brother. But businesses also provide value to other people, or at least they should, and the successful ones do it well, and they profit because they do it well. And honestly, brother, I think you do that well. So I would like very much for you, if you wouldn't mind, to maybe expand on that, providing that value, looking at it. I get it, people are coming in here to try and better themselves, but at the end of the day, helping others also helps yourself. So would you mind talking a little bit about that?
Yeah, definitely. So it kind of goes away from what we've been talking about as far as, risk management and everything else. This is more so doing it as a business, treating it as a business. You did make a comment to where, I do have a paid version of my platform. That's only if they want access to me. Because what I do is I do the giver's gain mentality. I give, and I give everything for free. On all of my live streams, you ask me any questions, chart setups, whatever. I do all that for free. And then if you want access to me and all the additional stuff, then you can join the group. But you don't have to join the group to learn how to trade. So Once again, I do the giver's gain mentality. I've been doing it all my life. I didn't even know there was a thing called that. But Crypto Billy, he started saying that. I was like, all right, giver's gain. But as far as like the business portion of it, like you want to provide value, but you can only do this once you already learned it or you're learning it. But going to what BC PortCorp was saying, where treating it as a business, you want to make money. And this is not so much the group anymore. I'm kind of swaying off of that. This is more so for just trading in general. You want to treat it like a business. You don't want to lose money. The goal of being in crypto is to make money. So if you do find that you're losing money, it's problem solution. Problem is I'm losing money. Solution, learn how to trade. Like I'm not trading. Something's not going right. Whether I'm using the same strategies as I was using in the bull market, now I'm using those same strategies in the bear market. It's not working. That's what, when you want to treat it as a business, you don't want to lose money. So if you are losing money, identify the reasons why you're losing money, and then find the solutions. And sometimes you may need a community to help you with that. And then you slowly but surely, start building that foundation. And once you have a solid foundation, you can build anything on top of it.
The next point that we should probably talk about, and that's staying consistent with everything that you're doing in your plan. And I know we talked about, BC mentioned it way back in the beginning, and we said we were going to get to it, and here we are, where you got to be reevaluating. You gotta kind of rethink. Maybe something didn't go the way you planned, but you still have a plan. So now what do you got to do to reset yourself and move yourself in the right direction? And part of that, I think, is being disciplined enough to consistently reassess, and whether that's getting more information from community, mentors, whatever, and implementing that. Joe, any thoughts or suggestions that you might have to people in order to kind of stay consistent with what they need to do with their plans?
Anytime you can have somebody hold you accountable, that's always the best. So if you're in a community and you do let's say you do a chart, and you have your stop loss and your targets, and let's say at the beginning you're closing out your trades too soon, or you're moving your stop loss down and moving it again down. Well, now when you start posting to that group, now they're kind of keeping you accountable for that chart. So again, you're updating the group, but at the same time, you're keeping yourself accountable. And I think that's really important.
Yeah, no, that's kind of like standard if you've got a coach, even if it's like somebody in the gym, right? You got a trainer or something like that. They're there to hold you accountable to your workout routine, right? I mean, so that makes a lot of sense. BC, add some more alpha to us.
This is going to touch a little bit on that business aspect, but just like a business keeps notes on what they're doing, they track everything from,
Good
hey,
point.
this is what I did, this is where I entered, this is how much it's making me. That will help you to keep yourself accountable. Write down, what was the goal of this investment? Where was it supposed to take me? Where is my exit? The same way that you have that, oh, well, this is where I'm going to enter, you should have that, this is where I'm going to exit. You should be keeping track of it the same way that a business would keep track of what their moves are making. Because if they have a manufacturing practice that is not making them money and is instead losing them money, you know what they're going to do? They're going to change that manufacturing practice. The same way that if you have an investment strategy that is not working for you and is not being profitable, instead of gaining 10% over a month, you instead lost 15%. Well, you have that documentation, you realize it very early, and then you make that adjustment as needed. That doesn't mean that if the plan wasn't to enter here and now you're down 15%, and then the plan was at this next key level to kind of enter a little bit more, a little bit heavier, like that is a strategy. But if that was not the strategy you wrote down when you first entered that project, don't do it. That is, don't throw good money at bad money. That is not the way you went. You throw good money at good money and you stick with your plan. Do not let that emotion override what the plan was. No business runs like that.
Yep. Oh, man, I was going to bring up the point of FOMO, and you just like hit on it right there, because it's so easy. This whole time, the three of us have mentioned emotions in whether it's trading, investing, or whatever. And even when we talk about doing it like a business, I mean, emotions get into business. Let's be honest. That's why a lot of businesses fail. Boom. There it is. But mic drop. But anyway, guys, I'm not even going to jump right in. What say you with regard to that, helping with the FOMO situation? Whichever one of you want to go first. Have at it.
Well, there's always going to be that next shiny project. There's always going to be that thing that's taken X over by storm that everyone's making a YouTube video on because it gets them the clicks and everyone's talking about it. But, buying a new coin every week because it's shiny is not an investment strategy. It is not a trading strategy. It's that hype. And what I said about hype earlier, you can win time after time after time. But if you keep chasing that hype train, I've watched it destroy enough people's portfolio to just stick with what I know works. And hype works for a little while until it doesn't. And when it doesn't, it really doesn't.
Joe, how's that phrase go? Everybody's a genius in the bull market. Did I get that right?
Oh yeah.
I mean,
everybody's a genius in the bull market.
Oh yeah, man. Yeah, Joe, anything else you want to add to that? And then we'll get to the last point, and then maybe kind of round table out our way out the video here. Anything else you want to add?
If you see it moving, it's already moved. You want to wait for the next drawback or another coin. It's already too late. So
yep, facts. All right, listen, but what we just talked about to me plays into the final point to a great degree, which, as much as you don't want to FOMO, you kind of got to be able to like come back and say, okay, is this working? And if it isn't, you fix it, readjust, whatever, like we've mentioned earlier. Or if it is it more of the same? Do I take profits? I don't know. But we got to, I think, talk that out a little bit. And maybe we'll, like I said, I'm going to leave the screen just like this. Let's make it a little bit more of a round table. I don't know, guys. I think the revisiting piece is probably the most important part of this entire video, quite frankly, because if you're not flexible, I think you're just going to get mutilated in the cryptocurrency space. Guys, jump on in and put your 2 cents in there. Again, conversation style right here. Have at it.
I know I've touched on it quite a bit here in this. And I think that revisiting is very different for Joe than it is for me.
Good
where point. I invest long term. So my time horizon on revisiting an asset takes a little bit longer because I want to see if that move that I was looking for that might take 4 to 5 to 6 weeks actually plays out. And so I'll revisit every 3 months or so and be like, okay, well, are my goals still the same? Is the goal still to get to this target? If it's not, then we readjust. Are my risk tolerances still the same? Maybe things are looking a little bit different in the economy right now. Hey, inflation's really running rampant. Maybe I go back to safety a little bit more and lessen those risky assets just a bit more.
Life happens, right? Heck, just your situation may change. Who knows, right? Good Lord. And never mind the market on anything.
Oh, yeah.
Sorry, I didn't mean to interrupt you, but it's just like as you were saying that, I'm thinking to myself, oh man, I could have lost my job or whatever. Like boom, and there it is. Like I said, sorry, didn't mean to interrupt, but
no worries. That's a key point too. I know we had someone in the community the other day that was like, you know what? Yeah, alts weren't performing. I had expenses coming up on redoing my home, so I cashed out all my alts. And you know what? That provides just as much value to you as holding those alts would and hoping that they pop maybe next cycle or maybe get a little bit of a boost now. You just added value to your house, which in the long term is going to play out a whole lot better than hoping SHIB reaches reaches like 10 cents.
Joe, come on, jump in on this conversation here, brother.
Yeah, as far as that goes, you're exactly right. Like my revisiting is like much sooner. It all depends on which coins I'm doing, but of course, Bitcoin is the longer term one. But you're always looking for the retraces and everything else. It just depends on your plan, and that's the biggest thing is to have a plan. Because if you don't have a plan, you are literally just doing whatever anybody tells you to do. You're very impressionable because you don't know like what to do. But that's where all the learning comes into play. And the more you do it, the more mistakes you'll make, the more advice you may get. Of course, never financial advice, but the more advice you'll get. And, it's all a learning process. Like every cycle you go through, you learn a little bit more. And the ones that don't learn, well, those are the ones that leave because they're like, you know what? I lost money. I can't do it.
Oh yeah, crypto's a scam. Yeah.
Right. Exactly. But if you're here again next season, that just means you learn something. And every season you do it, every cycle you do it, you're going to be learning what to do, what not to do, and it's just time. It just takes time and experience.
It's funny, Joe, that you just said that because it comes to mind something you said on a couple of your live streams when where you said, I did X, Y, and Z in this last cycle, and now I've come to the mindset that it's about Bitcoin. And again, not what this video is about. This is trying to get these people who are just coming in to at least develop a plan, but maybe Bitcoin is the plan. Who knows? But Joe, as soon as you were talking about that, that's the comment that came to my head. Because again, you've been around the space for a while, and then here you are now like, man, it's about Bitcoin.
Yeah, it's because everything's changing. We kind of talked about this earlier. Just everything's changing. You have to adapt to the market. You have to adapt to what's going on. And last season, people made money with a whole bunch of other tokens. This season, it's all about Bitcoin. You can see it like BC PortCorp was saying, zoom out, on the weekly, and you just see it up. And all the other coins, yes, they've done 60, 80%, but then they take it all back and they give another 30, 40%. Then they'll take it all back. And you zoom out on them, and it's like, man, that's nothing compared to what Bitcoin, and Bitcoin is literally the turtle. And, all
Yeah.
the alts, those
Yeah.
are the rabbits. So,
Yeah.
I mean, slow and steady
Facts.
wins.
Facts. Guys, we're going to wrap this thing up, but I'd like to give each of you an opportunity to say any last pieces of information that you think might be the right thing for people new to the space, coming in, trying to put together a plan on how they're going to be here, act here, succeed here in the space. We'll start with BC. We'll wrap up with Joe, and then we'll call it a video.
Whether you're going to be trading or investing, decide how you're going to do that by what you can handle mentally, what you can handle emotionally, and what you can handle financially. All three of those things are going to build the base of how you're going to invest or trade, depending on what your style is.
What your
Maybe
strategy
mentally you can handle the whipsaw action of 15% up, 20% to the downside, and then ripping 15%, 50% to the upside. Maybe emotionally you can't handle that though. So you have to readjust to what you can, all three of those, handle together. Because maybe mentally you're prepared for that 50% rip to the upside, but emotionally you're like, oh, I'm 30% up. Let's get out. But financially, you needed that 50% gain to hit your plans. Make sure that it is well-rounded so that you are not messing up in any one of those categories.
Perfect. Joe, take us home, brother.
So the biggest thing I would have to say is just know that you have time. Do not rush into anything. Learn, invest in yourself, take time, write down notes, watch videos, take notes, watch them again, take more notes. Invest in yourself is the best investment you can do. And when you do that, when you do end up trade with very little money. That way the emotional part isn't, so prominent, especially in the beginning. And then you'll gain confidence in your trading the more successful trades that you have. Don't come into this game thinking that you're going to get rich really quick. What you want to do, like BC PortCorp mentioned, you want to build wealth. And the only way you can do that is one step at a time. But once again, take your time. We have time. No matter how long it takes you, a year, a month, 5 years, you still have time. And find a community that is good, that wants to help you, not just get rich off of you.
Amen. You know what? I was going to let you have that last word, but I got to add one thing into that, Joe, because you inspired me. Time is on your side, even when you're my age. That's all I'm going to say. Even when you're my age, because if it ain't, for those who are familiar with my channel, and if you're not, why ain't you sub? Okay. But again, I've got the long-term mind horizon because it's for leaving that wealth to the family. So there you go. Thank you, Joe. You inspired me. I had to put that in there, man.
Got it.
Guys, thank you so much for being here. I really appreciate you, honestly, from the heart. Joe, not hopefully, I know you're going to be back. You're on my channel all the time, brother. So thank you. I appreciate you being here, man. Thank you. BC, appreciate you as well. You guys are amazing.
Thank you so much.
I'm glad to be here. Glad to help out. So I hope everyone has a great day.
And I learned, because again, this is all about learning. I learned I need to listen to BC PortCorp just a little bit more. There you go.
There it is.
Well, if that's not a glowing review, I don't know what is.
Amen to that. I hope you got some great information out of that video. Again, links to BC PortCorp and Trade Intuition are in the description of this video. The education has to continue, and it will do that right here. So head over to this video, and I will see you there.